Abenomics has received another boost as a weaker yen has resulted in a rise in exports for May. Despite a drop in export volume of 4.8%, the value of shipments abroad increased 10% in May year-on-year, the most since 2010. While international consumers did in fact purchase less Japanese-made goods, the devaluation of the yen meant that what purchases did buy was worth more once converted back into Japanese currency. The US and China have been the greatest recipients of Japanese goods. Shipments to the US rose the most, 16%, largely as a result of a 13% increase in car exports. Exports to China gained the most since February 2011 at 8.3%. And in a sign of European sentiment, sales to the EU fell 4.9%, dropping for a 20th consecutive month. Bloomberg highlights that today's data reflects an almost 12% slide in the yen against the dollar, hitting a 7-year low against other major currencies last month in response to Mr. Abe's stimulus program of looser monetary policy. The yen's fall is a double-edged sword, however, as the cost of imports has also risen. The 10% increase in May exceeded the value of exports for the second straight month, on the backdrop of a larger year-on-year trade deficit of 993.9 billion yen. Despite receiving criticism from trade partners such as South Korea, Mr. Abe announced on Tuesday that he had received support from G8 leaders for the administration's radical three-pronged stimulus policy. The group praised Mr. Abe's policy of pushing greater stimulus, looser monetary policy and longer-term structural reforms, but did warn of planning for the longer term, stating Japan's growth will be supported by its near-term fiscal stimulus, bold monetary policy and recently announced strategy for promoting private investment. However, it will need to address the challenge of defining a credible medium-term fiscal plan. Bank of Japan Governor Mr. Kuroda will be speaking on Friday at the NASB and will be sure to bring you all of the key highlights. Goodbye for now.